right, everybody, welcome back to another Dividend Journey episode here on Financial Friends. Today, as you can see by the title of this video, we have some exciting things to go over on in regards to O, or the Realty Income Corporation. But before that, I have some portfolio updates and some movements and things like that, as well as we're going to check on the diversification of the portfolio, again, trying to get to that 50% mark of ETFs. So let's go ahead and just kind of dive in here. So the first thing I want to point out is you could see like the growth, right, of our portfolio over the last month or so, and it's been pretty, a little bit up, boom, a little bit, you can even see here a little bit down, up. And that's really because we're growing our portfolio through additions to the portfolio, right? So the portfolio isn't necessarily showing staggering growth, and we're never really going to see that staggering growth. Again, this is a dividend portfolio, so we're mainly getting, our growth, or those spikes there, from the $10 to $15 stock purchases we're making every single week, and then we're going to let those dividends roll in and kind of compound and build the portfolio. As you can see, that annual income up to $7.83, and that's something else I wanted to point out. Here you go, you could see in the latest video, this was episode 12, and if you're watching now, you're watching episode 13, we went from 2.3% on our dividend yield and $6.96 in our annual income, up to 2.4 on our dividend yield and $7.83 on that annual income. So things are coming along nicely. What did we add to the portfolio to get that? Well, we're kind of sticking with our tried and true little strategy here. We added $10 of O. We also received a 10-cent dividend from O, so that was reinvested into the position as well. And we went ahead and invested $15 into SCHD, our spirit animal. So let's go in and see the diversification of the portfolio now that we made an even larger, again, SCHD add. So we're up to 45.95% of the portfolio in ETFs, 21.84 in industrials, that real estate portion slowly growing, and we're going to touch on that even more. Healthcare's sitting at 9.41%, and then information, which is really just Apple, at 8.86%. So I have some notes down here. We made that update. We made those additions. Let's go ahead and check out O. So let's head over back to the portfolio, and we'll go over here, and this is Realty Income. Now, I think I touched on this a bit and kind of showed the website towards the beginning of the dividend journey, but I wanted to add even more onto it. So you could see the current price here, and it kind of, really shows it's like, it's more about the stock than it is about all this other stuff. It has a little information here and there. You can take a look at investors and such like that. But what we're going to look at is here, the monthly dividends, the portfolio, and then we're going to look at the actual portfolio itself. So 618 consecutive monthly dividends paid and 97 quarterly increases in a row. So this is proven to be a fantastic income stock. And it's in the name, Realty Income Corporation, the monthly dividend company. So this is why we are investing in it, is it's going to pay us. And the reason that I enjoy this one over other REITs is this is paying us monthly, every single month. And so our position is constantly compounding. Whereas, a quarterly paying stock might compound your position every quarter, or a semi-annually paying or annually paying might compound, twice a year or once a year. This position is compounding 12 times a year, which is fantastic, especially as the position grows. It's also something I feel very safe putting money into. You can see 11,000 long-term net leases, 650 different clients, 60 retail and other industries, 50 different states, also got Puerto Rico, the UK, and Spain in there. So this is something that I'm very excited about. You can hop in here to the portfolio and view the top 20 clients. These are big names. These aren't just mom and pop, small places that might go out of business. Now, you do have locations like Kroger or CVS that might be in and out depending on how the area is doing, but you have big clients. 7-Eleven, almost 600 leases, 5% of the portfolio in terms of revenue. Walgreens, Dollar General, Dollar Tree, LA Fitness, AMC, Walmart, Lifetime Fitness. I mean, these are really, really big names. Home Depot, CVS, Kroger. Again, very, very big names. And so what comes along with big names is big money. These are companies that have money to get new locations and that are going to be able to sustain maybe periods of uncertainty or things like that. I mean, we just had one of the biggest tests ever over the past couple of years and even still moving forward. And you can see the occupancy all the way from 1992, 98.6, even in these tried years, 97.9, and it went up 98.8 during 2021 or the Q3 of 2021. Total properties have continued to grow over time. Even from 2020 into 2021, those properties have grown, and vacant properties have gotten a little bit higher, but that's also going to come with the territory. The more properties you have, right, the more are going to be vacant. And if you did these as 140 as a percentage of 6,500, and then even again, 7,000. If you did 86 out of 7,000, that's an even lower percentage. So these are the type of things that make me feel comfortable about putting money in. You can even check in terms of industry. They have exposure, this is the most recent date here, in aerospace, apparel, automotive, childcare, dollar stores, drugstores, obviously a bit larger of the percentage of the portfolio, health and fitness, grocery stores. I mean, so they're not just limited to rental properties or healthcare or entertainment or financial services. This is a company that has real estate exposure in, count them up, I don't even know. They also have exposure overseas. They have exposure in every state here in the United States. So again, we can check more on that, geographic diversification. Michigan, they have some. Washington, Oregon, California. They have 3 properties in Alaska, 22 properties in Hawaii, 442 properties in Florida, 15 properties in New Hampshire. Let's see if we can check Rhode Island. 3 properties in Rhode Island, which is the size of basically my backyard. 18 properties in Connecticut. So again, we can explore, throughout Europe if we wanted to as well. I'm not going to go into it too much selecting each one, but I recommend that if this is an investment that you're interested in, I am by no means saying that you should purchase this stock or this company. I am just saying if you are interested in doing so, check out this website. I'll leave a link down below if you want to go ahead and look it out. You could check out presentations, new acquisitions. There's a ton to kind of browse around and look at, and that is why I'm going to continue to grow in my portfolio, and I think I'm going to try and continue to make it a larger percentage. Now, in terms of the dividend, you're going to have that dividend yield of almost 4%, which again is going to continue to bump up our yield, which is what we're looking for. It also is continuing to grow in terms of stock price. So far, I have profited 1.7%, which again, we're not necessarily looking for huge growth there, but we are looking for dividends. And going back to that dividend fact of, trying to compound monthly, if we look at our payout calendar, again, this is our only dividend that is consistently paying out every month. I did mention trying to fill those gaps in, maybe getting something that pays in January and something that pays in April and July, etc. But if we continue to grow our position in the Realty Income Corp or in O, that's also going to provide our portfolio just additional compounding every single month. And you can see our dividend growth over time. If we continue, as we've continued to grow, as we've made these purchases in O and SCHD and really focused on that yield, it's spiked up. Versus when we were adding positions like 3M and Waste Management, which again are good positions, good dividend payers, stable companies, they're kind of that potential growth of the portfolio, if that's what you want to see. And then O and SCHD are really that anchor down at the bottom, holding everything together for us. So with that being said, those are the things I wanted to touch on. I am very, very excited to continue to grow this portfolio. We're going to hit that 2.5% very, very quickly. We're going to continue to grow, and we're hoping, again, $25 by the end of the year. So with that being said, I will see you all on Thursday. If you like this video, go ahead and give it a like. If you want to be notified of the video on Thursday, make sure you are subscribed, and then go ahead and hit that bell right next to the subscription button. That way you know when that video on Thursday goes up. With that being said, have a great one.